Hello, everybody, and welcome to a really exciting night on cryptocurrency, which Bitcoin has had a bloodbath. And we're in the middle of something that is, if you are an investor like I am, a little nerve-wracking, to say the least. It's one thing to put a few $100s into it, but then see that, you know, when you put something in, it's, you know, you've got $200, and then all of a sudden it's $20,000. And it goes down to 10, you're like, I should have pulled it out. It's a lot easier to invest the money and say, oh, I'm just going to leave it in, and I'm not even going to check it. I'm not going to work. And then when it starts to be real money, all of a sudden all you can think of is, I should pull it out. Should I pull it out? Should I pull it out? Tonight we're going to address that. And this is something that has been in the making for about 3 or 4 months on my side. And I'll tell you about that here in a second. Full disclosure on me and my relationship here. The Palm Beach letter and Palm Beach Confidential, with Fernando will explain that, is a little later on in the program. They are sponsors of my radio show, but I am also a user of the Palm Beach letter and Confidential. I use these myself. I never, ever endorse anything that I don't really like or I don't use, and especially when it comes to money, I would never be sitting here if I didn't believe in the gentleman who's sitting here and the information that you're going to get tonight. I also want you to know that this is not, tonight we're not going to be talking about blockchain or how it works or the basics. This is something that Tika, when we first met, I don't know, 6 months or 8 months ago, he was in my office and he said, I said, can you just teach me about blockchain? And because I got a basic handle, but I need somebody to talk down and slowly to me. And he came in and we spent about 3 hours that day. And about halfway through, I said, could you do this for our audience? That is a separate show, and that's free as well, and it's online. And if you need the fundamentals, you go watch that. This tonight is to show you some information that I think is pretty shocking and may actually, in the end, transform your life. So you know, as I always say, please don't take my word for it. Don't take anybody's word for it. Do your own homework. And as Tika will say over and over tonight, don't invest money that you don't have. Don't put tons of money. This is a different kind of investment. It's not like the stock market.
Right.
This is something entirely different. We're also going to be taking your phone calls and your questions a little later on in the program. But first, I want to introduce you to a man that I got to know about 8 months ago, and he came into my office, and we were looking for some expert that could actually speak, you know, like a human being. That wasn't just giving me a bunch of gobbledygook that I have absolutely no idea. Well, you see the head and shoulders here on this chart. I don't know what that means. And so we sat down, and I quickly came to respect him. And we didn't do any business at that time. Right. We wanted both of us to do business with each other, but we didn't. I wanted to make sure that I was reading and using the newsletter, see if there was any value in it, and there is tremendous value in it. Tika Tiwari, welcome.
Thank you, Glenn. It's wonderful to be here.
Yeah. So I want we have to accomplish a few things.
Okay.
First thing we have to do is I've had enough time to do my homework on you.
Yeah.
And when somebody's giving you advice, especially when it's, you know, hey, you should buy this, you know, I got to know that I can trust you and it's not a sham wow kind of commercial.
Sure.
You know what I mean?
Yeah, of course.
So let's start with who you are.
Yeah.
You were former Wall Street.
Correct.
Okay. You are now a vice president, an editor?
I was a vice president on Wall Street. I was the youngest VP ever in the history of Shearson Lehman Brothers.
Okay, we'll get to that here in a second.
Yeah.
But I want to know where you are now.
So where I work for the Palm Beach Letter, and I'm the editor.
You're the editor, yeah. Okay. Let's go back now all the way.
Yeah.
so we know who you are.
Okay.
American citizen or English?
I am American now, but I was born and raised in London until I was 16.
Like an orphanage or something. You were like, I'd like more, please. Right?
I guess the 1970s version of that. I grew up in the foster care system. I grew up in group homes, and I was raised by a couple of different foster families.
That is a really hard childhood.
It had its challenges, Glenn.
Right.
Yeah.
So, I mean, you think of foster care, I mean, the worst part of, especially over in England.
Yeah.
Did you have soot on your face? And you're like, I met me a chimney sweep outside just a minute ago.
Well, I can tell you, although I'm a little portly today, there were days when there wasn't food, and in my bedroom, it was completely unheated, and my bedroom was over a garage that was uninsulated, and when you breathe like that,
oh my gosh,
you could see your breath. And so my bedroom was usually around 38 to 42 degrees.
Holy cow.
Yeah.
So people have choices to make in their life.
Sure.
Your life went from nothing, foster care, to, I don't want to get into it because I missed the opportunity on Bitcoin for so long, you are tens of millions of dollars healthy. You don't have to be here, let's put it that way.
I don't have to be here.
You don't have to be here.
No, I have a bigger mission
than
just making more money.
So you're in foster care. Again, people have decisions to make. A lot of people, starting the way you did, go off and don't amount to anything.
Correct.
Okay. You, at what age, decide, I want to work in Wall Street in America?
12 years old. I saw a show on TV, and I got exposed to the stock market. And I thought this idea where you could use your brain and and forecast economic events, that you could buy a piece of paper and it could go up in value, was revolutionary to me, because at 12, I had only ever seen people make money trading their time for money. I'd never seen anybody make money with their mind before. And that
Wow.
idea just fascinated me.
So when did you move here to America?
When I was 16 years old, I left the UK. I had $150 in the clothes that I was wearing, and I came to the United States.
How freaked out were you?
Very freaked out. Very, very freaked out.
Did you have somebody hear you were living
I had
a chimney sweep?
I had a relative that would let me crash on their couch, and I slept there for 6 months. I worked 7 days a week to get enough money to get my own apartment. So within 6 months, I had enough money, and I got my own apartment, and I was out completely on my own.
Unbelievable. So did you finish high school?
I finished high school at 16. I got accepted to college in America when I was 16. I went for 2 weeks, and Glenn, it was like high school with ashtrays. I
Okay. All right.
I couldn't do it.
So when do you go to work on Wall Street?
1 month after my 18th birthday, I talked myself into a job at Lehman Brothers, which was the #1 producing retail brokerage firm in the world back then. It's 1989. They were doing $150 million a year in revenue.
So this
retail.
This is Gordon Gekko time.
Yeah,
this is
that's
like
right.
Wall Street with the Armani suits.
Oh yeah,
and,
and the suspenders.
Yeah. So you talk yourself in, and what position do you get?
So they had me pretty much as a glorified gopher. So at Lehman Brothers, you'd work 60 hours a week. They pay you for 29 hours, so they wouldn't have to give you benefits.
Oh.
And my pay was amazing. I was getting paid $4 an hour.
Wow.
Right.
Wow. Was that even?
No, I couldn't live off that.
No. But that was minimum wage back then?
I think it was 25 cents over minimum wage.
Oh
minimum wage was $3.75.
So generous.
Yeah.
Okay.
Yeah.
So you're working 60 hours a week.
So I'm working 60 hours a week.
$4 an hour, and you're only being paid for
29 hours. So I have to work at night on a loading dock in Brooklyn. And then I work in a kitchen on Saturday and Sundays, 12 hours Saturday and 12 hours Sunday. And I worked like that for almost 2 years.
And that's at 18.
18.
How close to 20 were you when you became a vice president?
I was 20, just about to turn 21 when I became a VP.
How did that happen?
I became the highest grossing rookie broker and then second-year broker in the history of the firm. I just was really good at my job. And they said, well, we got to make this kid a VP, otherwise he's going to leave.
That's unbelievable. Right. The old farts must have hated you.
Yeah.
Okay, so you're on Wall Street, you're working for Lehman Brothers.
Right.
What years this?
These are the 80s, early 90s.
Early 90s.
Yeah.
So tech is just beginning
Tech
to start.
is just beginning to boom.
How much money are you managing?
Several $1 million, maybe about 10 million.
Okay.
You know, which for a kid at 20 years old
was
was
more than I had, and
was a decent whack.
Right. So, so you're looking at that, and at some point you decide, I want to go do this myself.
Right. Well, that was much further along. I was around 2003 was when I actually started up my own hedge fund.
Okay.
Yeah. So that was, I had already been on Wall Street quite a few years.
Okay. I want to, and I hate to do this to you, because I told you earlier today, and you're like, let me just say it this way. If you're a viewer of mine, you know that every time I'm on a show, they always say, and what was it you said about President Obama? And you're like, oh, dear God, it's been 10 years. And you can never let it go. But this is important because we're talking about your money. And when I first met with you, I had watched a bunch of your stuff, and I had listened to you, but I didn't really know anything about you. And God forbid you Google anybody, and it's like horrible. But I Googled you, and it said that you had lost your license on Wall Street.
Correct.
And I want you to tell just as much as you need to, basically what you said to me. I didn't say anything when you walked into the office.
Right.
I knew, my business partner and my producer knew, but we didn't say anything because we said beforehand, let's see how he handles this. If he doesn't bring it up, we'll bring it up, and let's just watch him. Didn't think you'd bring it up. First thing you said, hey, I just want you to know. What happened?
Yeah, you know, I was young, I had a young family, and I made this mistake of starting up a hedge fund while I was still with my brokerage firm, and did not tell my brokerage firm about it. And you can't do that.
Right.
You can't start something up while you're still a registered broker.
Even though those people were paying you $4 an hour and working 60. Yeah. Okay.
Right.
All right.
So, you know, it's emotionally uncomfortable for me to talk about because, you know, it was honestly, it's the worst decision I ever made in my life, and I regret it to this day. I should have just resigned and then started up my fund.
Everybody makes stupid mistakes in their life,
and that was my stupid mistake.
Yeah, and I wanted you to know, and I wanted you to hear it from me first on what he did when he came into my office. I immediately liked you.
Yeah.
Because you immediately came in and said, look, I just want to tell you about the biggest mistake I ever made. You know, you might find it, you might not, whatever. And I
wanted you to know if we were going to work together, you had to know. And that's why I told you about it right off the bat.
Okay. So we kind of know who you are, your background. Tell me your background with crypto, because doing my research on you, you've only really been doing crypto for about 3 years.
Right.
That's not a lot of time to have, as you will find out in a minute, the accomplishments that you have had on crypto.
Yeah, I mean, crypto is very new, so 3 years in the crypto space is like
1970.
It really is on Wall Street.
Yeah. Yes. But what drew you to this?
So what drew me originally, when I was first exposed to Bitcoin, I thought it was a fraud and a Ponzi scheme. I said, you know, this just doesn't make any sense. A bunch of guys that are mining this kind of magic internet money, and we're going to say now it has a value. It just seemed ridiculous to me. And then I saw Bitcoin crash, right? Bitcoin went from I saw it go from $7 to $1,200 and then crashed to 200. And I thought, okay, well, that's the end of Bitcoin then. And then something really interesting happened. You see, when something's fraudulent or it's a bubble, when it crashes, it goes to zero, right?
Bernie Madoff
went to zero. Bernie Madoff went to zero. Enron went to zero. It doesn't have any value. And then I looked at Bitcoin, and it was still worth about $3 billion. And I said, okay, I'm missing something here. So then I heard a speech given in January of 2016, and I finally understood the power of Bitcoin and the blockchain. I realized this was a way that people who didn't know each other, like each other, or trust each other could transact in a trustless way, and that we could own value that nobody else had any claim over, which is not the way the world works right now. It doesn't matter how wealthy you are, if you own real estate, stocks, bonds, or gold. If the government wants to take your money, there's really nothing you can do about it. The beauty about cryptocurrency is if you keep your private key, your password safe, and don't blab it to the world what you own, no one can take that from you.
Right.
And that's never happened before.
This is the thing that intrigued me. I'm not exactly an optimist, and I see the way the world is going, and I see what's happening, especially in China, where it's becoming 1984 in China.
Very much so. Have you seen their social scores?
Oh yeah,
how that works. Yeah,
that's going to be a prison.
Yeah.
By 2022, that's a country on lockdown and a prison. And the whole world could go that way.
Correct.
It's changing. And, I've done enough homework on revolutions and everything else, and I first came to cryptocurrency, my interest level, because, I don't want to eat a bunch of diamonds, then go across the border and have to pick it through. I just don't want to go down that road. The thing about cryptocurrency, as long as you know that number, it's yours forever.
It's yours forever.
But it's not something that it's getting a bad name on. And I think this is really important. This is something I learned from you just this week. This is not. This is a device for really stupid drug dealers.
Right.
This
correct.
is not something that it's being imaged as.
Yeah. If you're a terrorist or a GRU agent or a drug dealer and you're using Bitcoin, you're dumb.
You're dumb.
You're dumb.
That's how we caught the Russians.
Yeah, that's exactly
we followed
how
their Bitcoin.
We followed their Bitcoin.
Okay.
Yes.
So it's again, and this is one of the things you're kind of going to get into with the conspiracy that is going on, if you can call it that.
I call it that, Glenn. It is. What do you call it when people are deliberately pushing down the price of an asset publicly and then going out privately and buying it?
Yeah.
That's manipulation.
Yes, it is. Okay, so that we're going to cover that tonight.
Okay.
But I want to stay here with that 3-year period. You're still using it as school time, if you will. You're meeting with the biggest of the big.
The absolute biggest players. I don't know if we have these images here, but what I do is I travel all over the world. I don't just sit behind my desk.
Right.
And I go out and I meet the development teams, I meet the people that are actually building this code, I meet the venture capitalists, the people that are funding it, I meet with pension fund managers, I meet with hedge fund managers, and I sit there eye to eye, belly to belly, and say, okay, what are you doing? Why are you doing this? What got you excited about it? What was it about this particular project that you liked, right? And then if I have a project that I like, I say, tell me about this project. Or I'll sit down with a guy that's a complete genius and say, take a look at this technology. Is it legitimate? Right? So I have that access. And when you have that access, it gives you an enormous edge in your ability to pick winners.
And these guys who are in cryptocurrency, they're eager to teach.
They are.
They want people to understand it.
Yeah.
I sat with Mark Andreessen, biggest mistake of my life. And talk about hanging your head in shame. Biggest mistake of my life. I'm sitting with Mark Andreessen, who, is...
He was the man, right?
He was the man.
He kick-started the whole internet boom.
Yeah. So, and he started, BitPay.
Yep.
And I'm sitting in his office, and he says, we're going to start this little BitPay thing, and you should get into, it's like 1920. You should get into plastics. That's crazy. And I heard Warren Buffett's voice in my head.
Right.
If anybody remembers during the dot-com bubble burst, he said, "Don't invest in anything you don't understand." Well, this is crazy complex, and I didn't understand it. That was a mistake.
I will say, don't invest more than you are willing to lose in what you don't understand.
May I say, don't invest in things that you can't afford to lose at any time.
Right.
But also don't invest in things you don't understand and should. For instance, you could talk to me about how the air travels under the wing and then over the wing and how that provides lift for, a skyscraper and we can fly to another city. I don't understand it.
Right.
I don't need to.
Yeah.
I got enough of it to trust it.
Yeah.
So you are working with people, the Ethereum founder?
Yeah, so I interviewed Vitalik Buterin. I was one of the first guys to interview him. And at the time, Ethereum had already risen 3,000%, had $1 billion market cap. And I was talking to him, and I then studied the project, and I said, you know what, this thing is really undervalued. People thought I was crazy. It was around $9, and I wrote a report on it. As far as I know, it was the first ever really well-researched, legitimate research report on Ethereum. And I said, I put a $360 price target on it. which was over a $30 billion market cap.
Right.
When the whole market cap of the entire ecosystem was only, I think, $12 billion at the time. So I was saying that one idea
this
was
$9
was going to 3x the whole market ecosystem. People thought I was insane. Insane. 2 years later, it goes to $1,400 a coin.
Yeah. John McAfee.
Yeah, so I've seen McAfee, and I've talked to McAfee a lot, but I would say the guy that's really given me some great ideas is a guy called Roger Ver.
That's a Bitcoin.com founder. Right?
He's the founder of Bitcoin.com. He's one of the earliest investors in Bitcoin, and he has turned me on to just some fantastic opportunities.
Okay, before we go into, because you have some pretty amazing things to talk about tonight, I want to cover one more thing. This is not like stock,
right?
And this is not a mature market. This is, we're at horse and buggy, and Henry Ford is saying, I have an idea of an assembly line and a car. Nobody really is even thinking about this.
Correct.
And only the rich were going to be able to buy a car.
Yes.
Right?
Yes.
And so if you would, it's AT&T in 1920.
Yeah.
Right?
Yeah, you're looking at, nobody else has a phone, so how can this have any value? Yeah.
Right. Okay, so you come into my office, or I think it was about 3 months ago, and you said, Glenn, I want to see if you would help us do an event in mid-July.
Right.
And I said, okay, let me look. And I think I was actually going to be gone, and so I was trying to talk you out of have it, any other time.
And you were also freaking out about the market, remember?
Oh, yeah. Yeah. I actually was until we started talking this week. I still was freaking out. And you said, no, it's got to be towards the end of July.
Right.
Because, and you showed me some chart at the time.
Yes.
And you said, this is going to be the bottom and the turn of the market.
Correct.
Tell me about that.
Okay, so I did a study, and I don't know if we're jumping ahead here, if we've got some charts, but I did a study.
Yeah, there is a chart.
There is a chart on this? Okay, so I did a study looking back at the last time we saw an emerging technology like blockchain, and that was the late 80s, early 90s tech boom. Right? Technology was brand new. We didn't know how we were going to use it. We knew it was going to be important. We didn't know exactly how important it was. So I looked at the NASDAQ, and I looked at how the NASDAQ moved. And so I compared it with the modern-day crypto market, and what I found was there were times where the modern-day crypto market was moving in lockstep with this market from the 90s, right? An 87% correlation to the 1990 tech market. And so as I studied the 1990s tech market, it suggested, it saw this pullback, and it suggested that by July, the bottom would be in Bitcoin, and that we would start moving higher. And that's why I timed this event now.
So actually, I think this is on this chart here, right here. Is that the chart?
Yeah, that's the chart.
So tell me what that chart is.
Yep.
Show it to me.
Let's see if we can get the camera on this and the light.
Yep.
Okay, so this here is the NASDAQ between 1990 and 1991. It just absolutely collapsed. And then this line here is Bitcoin, and you can see how well correlated they are, right? So this is up to an 87% correlation. This is, these are two markets separated by almost 3 decades. And they're super correlated. And the reason being is that markets move in a very similar fashion when you have brand new technology, right? They move with sentiment, and you have this radical type of volatility that takes place. And so I call this the analog. And the analog is what has allowed me to make so much money in the crypto market, because when people were panicking and selling last year, Bitcoin crashed 5 times, more than 30%, and once it crashed 40%. So while people were selling, we were buying. I was telling my members to stay in play. That hey, this is normal. I've seen this, and you've just got to hold on. And then we were absolutely vindicated.
So we're here someplace
now.
Yes,
correct.
Okay.
Yes.
So, and you figured out that it was going to be
in July.
In July.
Yes.
And to show how accurate you are, the day before you arrived this week, You had come in where, from London?
I had come in from Vancouver.
Vancouver. And because you're meeting with all these people, and you come in and you just have a big grin on your face. I don't know what you're even grinning about, because I stopped looking at the bloodbath that was Bitcoin, and you said, have you seen it? And it is already just this week gone up, what, 15%?
15%.
15%.
15%, exactly as I said it would.
Crazy.
Right. Remember, there were two things that I said that were going to take the market higher. One was the technical action, and the second was there are a couple of things happening in Bitcoin that people are not familiar about.
And we have to get to that.
Okay.
Let's show a couple of things here. April or May of 2016, you're one of the first investment research publishers to recommend Bitcoin.
Right.
And that is, you recommend it's $428.
$428.
One of the first guys.
And you know what? I got hundreds of emails saying it was too late. Why didn't you tell us to buy it when it was 200? Why didn't you tell us to buy it when it was 20 bucks? How much more potential upside could there be in Bitcoin?
This is really important to understand. I'd like to see if you had charts some point of things like the telephone, AT&T,
right.
things really early, because people have to understand. For instance, people thought when pets.com went down, remember that?
Yeah.
They thought that's the end of that.
That's the end of the internet.
Right. It's not.
Yeah.
Because that product is not the internet.
Right. Correct.
And it's the same with cryptocurrency, and you believe, and I believe, Bitcoin.
Yes.
Right? That's the invention.
Yes.
It's not the pets.com.
I absolutely agree. I would compare it with an Amazon, or I would compare it with a Microsoft. Both of those companies got absolutely demolished during periods of their early days.
Okay. Ethereum. Mm-hmm. You're the first person to seriously, you were just talking about
that.
Right,
to actually write a proper, well-researched report on it, correct.
If you would have put $500 in,
yes,
this is an amazing stat. If you would have put $500 in when you recommended, you would now have 78,000.
That is correct. And that is at the heart of this opportunity, Glenn. And look, the people watching tonight, if you get nothing from this, please understand this, that this is a life-changing opportunity that you have in crypto. And what is special about it is you don't have to take life-changing risk.
Right.
You can take a small amount of money across a group of well-chosen ideas, and you can literally transform your life.
This is one, you said something to me earlier today that I thought was remarkable. You said you can't, with a small amount of money in America anymore, become wealthy.
You can't.
Right.
There's no asset class that you can do that with.
It's because things are established. AT&T is there. Disney is there. All these things already there.
They're already established.
Right. This is a different approach. Let me take you to this chart here. I see, you don't know how long I've waited to see, George Soros' head on a stick, but tell me who these people are.
Okay, so this is Carl Icahn.
Yep.
George Soros.
Yep.
Warren Buffett.
Yep.
Wall Street. Mm-hmm. And Ray Dalio, who runs the largest hedge fund in the world, and that's yours truly.
What does that mean?
This is the gains between March 2016 and July 2018. These are the gains that these luminaries have put up. So 15%, 21%.
So if I would have
39.
followed George Soros and did exactly what he said to do.
21.7%.
21%.
Yes.
Warren Buffett, who's the genius.
He is a genius.
Who kept me out of this when it was $30.
Yes.
28%.
Right.
You are 1,388%.
Over the last 2.5 years, and that includes the pullback, Glenn. We didn't cherry pick those numbers.
Okay, and the gains here, tell me about this.
These are some of the closed gains that my readers have already achieved. 11,318%, 710%, 1,600%, 643%. These are life-changing gains. You don't need to put much money in order to
And these are the things that you recommended?
Yes.
Okay.
These are ideas that I recommended.
And I want to just make this clear. You're not making money on Bitcoin, or, I mean, you're making money like I'm making money. I mean, it's not...
We sell subscriptions. Right?
But I mean on the products that you're recommending,
right.
You don't get money on.
No,
right?
no, absolutely not. No.
So you're beating Warren Buffett 40-1.
Yeah. Yes, 40-1.
Right.
I mean, I've got some stats here.
Go ahead.
So anyone who followed my recommendations could have turned $10,000 invested, and this is including winners and losers, into $115,000 over a 26-month period. So since March of 2016, I've recommended 45 cryptocurrency plays. Now, the average winning position that's still open, that's not closed, that's my closed number, 1,388%. But my average winning open position is up 2,357%.
Open means it's still in play.
Still in play. We haven't sold it.
Okay.
We have not sold it. So our average, I've taken 2 losses for an average loss of 48%. So our winners are 38 times bigger than our average loser.
What makes this, why are you different?
I do the work. I mean, my wife is a very, very patient woman. I mean, I'm not home. I live on airplanes.
She actually thought you were cheating on her.
She did. Yeah, she did. It took a long conversation to
You're like, honey, no, yeah, I'm with geeks.
Yeah, exactly.
Talking about blockchain.
Yeah. I actually took her on a special trip just so she could see what I actually do. There's actually just 2 more stats here I want to cover. If you had invested $200 in every recommended position that I've done, you could have made over $89,000. That's on a $200 investment. If you had put $1,000 into each of my recommendations, you would have made $445,000.
This is really important, and I think it's what I liked about you, because you're not talking about big money. But if you want these kinds of results, or at least have a shot at these kind of results, assuming, past is never, future.
Right, exactly.
But assuming that this trend continues like this, you have to follow your instructions.
Right. It's not just, hey, this is a good coin, go buy it. I mean, we have a whole methodology of how to buy, what to buy, a position sizing approach. Right,
because there have been some people that have taken, and they'll look at everything.
Yeah,
and
they'll say, I like this one, I don't like that one.
Right, and they'll dump 30 grand into one.
Idea, yeah,
and I know. I mean, that's why you've lost your hair. You're pulling it out from people, and you're like, no, don't put that kind of money into one thing like this.
You don't need to. So what I say, Glenn, is that there are absolutely going to be ideas that I recommend that go to zero, unequivocally. There will be some ideas that go to zero. And so what you have to do is you have to use a uniform position size. You put the same amount of money into every idea. You never risk anything more than you're prepared to lose. And that way, you're going to under-own a loser, right? And you won't over-own a loser, and you won't under-own a winner.
Right. Because the gains are so spectacular at this level.
It doesn't matter if a couple go to zero.
Right.
Because the gains are so huge.
Right. You lose $200.
Right. And you make $40,000 on something else.
Correct. So that is, I think, really critical. Okay. We have a studio audience here. These are people who follow you, who read your newsletter, who have made, I mean, you could have paid for your own flight, quite honestly, if you listen to this guy. But they have questions. I know the audience has questions, sure. And you have a few things to lay out. You have 3 cryptos that you're going to say today you should invest in.
Yes.
You have a price projection of Bitcoin, which you've already said on the air, and I think it's, I'm trying to...
You think I'm crazy?
I do. I think as the guy who gets hammered for saying the caliphate is coming, and when it didn't come, on Tuesday, I'm a freak. I know how people play with this.
Yes.
And your price prediction by the end of the year...
Yes, is conservative.
That's crazy.
It's conservative.
You want to make that? I'll have you explain it in a second. Well,
we'll get
think
to that
about
in a minute.
Think about it. I'm telling you, don't do it. But Because I will tell you this. We record this.
Yeah.
So you're saying it's going to be that by January.
I'll share a quick story with you. Last year, July 12th, I'm in London attending Blockchain Week, and the entire cryptocurrency market is melting down like 37 to 42%, something like that. Bitcoin's down 40%. People are freaking out.
Yeah, I was there.
Yeah. Okay.
Yeah.
So I'm getting emails. Tika, why didn't we sell? Why didn't we sell? The whole market's down. We should have taken profits. I mean, I'm just getting inundated with mail. And so I'm in London. Bitcoin's down 40%. It's at $1,850 a Bitcoin. And people are losing their minds. So I just got a tip-off that there was going to be an announcement later that year that I knew was going to radically transform Bitcoin and radically transform the price of Bitcoin. So I get in front of a camera, and the market's falling apart, and I say, yes, Bitcoin's at 1850 right now. Yes, Bitcoin is down about 40%. Bitcoin is going to go to at least 10K this year, and the entire market is going to 4X from this level. The hate mail that I got from making, you're irresponsible, how can you tell people this, you're giving people false hope. But you got to understand, Glenn, everything I say and everything I do is based on research.
Right.
So back in July, the reason why I was so bullish on Bitcoin is I had just found out that the CFTC, the folks that govern all the futures trading in the United States, had just approved the first step for a Bitcoin futures contract. So I knew once a Bitcoin futures contract started trading, a whole nother leg of money was going to come into the space. Mm-hmm. And 10K, I knew was going to be a low number. By the end of the year, we hit 20K. Now, if I had said 20K, I'm sure my publisher would have had me Baker acting.
And you know what? People would have said, you said 20, it hit 19.4, 19.7.
Right,
you know what I mean?
Right.
That's why I'm like, I heard your prediction. Bring it down, bring it down. And what was really frightening is he said, I did bring it down. I'm like, bring it down some more. All right, so this can be, if people understand low sums of money.
Right.
Spread it out, follow the system.
Yes.
It actually can be fun.
Yes.
You know, as it gets up to 35,000 or whatever it gets to, you know, then it'll be up to us not to freak out and go, you would just have to just leave it alone.
You got to leave it alone.
All right. We're going to get to the strategy, to all of the things, and also a chance for people to win. You're going to be able to win your share of $2 million in Bitcoin.
Well, you'll have a chance to claim your share of $2 million.
I don't know what that means. That sounds legalistic, doesn't it? So we'll get into that here in a second.
Fernando will explain all of that.
So here's what I want to go to now.
Okay.
The question that I had for you the other day was, why are you calling this the Great Crypto Conspiracy?
Okay.
And when you explained it to me, it's really, people should go to jail, but it's not illegal.
No.
And this is really horrible. And it's why we all feel so freaked out. But they are feasting on our savings. And it's an enormous robbery, quite honestly, I think.
It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid-90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, this is just a market for idiots. Nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
hang on just a second before you go on.
Yeah.
This one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, "I'm just taking the junk off the table."
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes. But during this period of time, the regular individual couldn't get a mortgage, right? It was virtually impossible to get a mortgage during this time, exactly when institutions were buying. And then the dot-com crash in 2003, if you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks,
people listen.
So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out? His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. And this is the kind of thing that George Soros is famous for this, talking the sterling down. And what did he do? He stole the pensions of all the little people.
Made $1 billion.
Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk.
And I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0. And then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to zero. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out. And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, it walks like a duck, it quacks like a duck.
And you know what?
It's probably a duck.
The people, they all hang out together. They all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency.
Right.
Have you ever heard her say all banks should band together against illegal arms?
No.
Or illegal drugs?
No.
Or human trafficking?
No.
No. But this nascent asset class, we must all join arms against.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is over.
Selling. Yeah.
So let me show you, can we show a chart of the 5 crashes? This is from, I think...
Last year, right?
Last year,
yeah.
Okay. Do we have that chart of the 5 crashes of Bitcoin?
Right. It was 30%. Right. I think 4 of them were 30% and 1 was 40%.
And this is, here it is. Explain this chart. Those are Amazon crashes.
Okay, so these are Amazon.
Do you have Bitcoin?
Yeah, we need the Bitcoin chart.
We are
all right,
so good.
They'll come up later.
Okay.
Yeah. So what I want to talk about now is one of the key lessons I learned from being involved in the market so long is rather than listening to what people are saying, look at what they are doing.
Correct.
So this is what we should look at, and this is what I want people to focus on now. Billionaire hedge fund manager Stephen Cohen, who's worth between $12 to $14 billion, by far the smartest hedge fund manager in the world, I would say of the last century, is buying Bitcoin. $6,800, buying Bitcoin. Mark Lazary, Avenue Capital Group, worth about $1.7 billion, has put 1% of his net worth into Bitcoin at around this price, $7,500. Andreessen Horowitz.
Mark Andreessen.
That's right, Mark Andreessen. An early investor in Airbnb, Skype, Facebook, just launched and Coinbase just launched a $300 million fund. Wellington Capital, they have $1 trillion in assets, are starting to get involved in Bitcoin futures. Susquehanna, the 12th largest trading firm by volume, they now have their own Bitcoin custody department, their own trading department, and they're trading Bitcoin and Ethereum. Goldman Sachs, this new CEO, David Solomon, the most pro-Bitcoin / cryptocurrency guy on Wall Street. The most pro
Goldman Sachs.
Goldman Sachs. He's the new CEO. He's coming into power shortly. BlackRock, this announcement just came out, the world's biggest asset manager. Now, last year, Larry Fink says, oh, you know what cryptocurrency and Bitcoin's good for?
Yeah.
Money laundering and drug dealers.
Right.
Right? So again, if you look at what he's saying, you're going to sell your Bitcoin, right?
Yeah.
You're going to say, oh, this is all BS. But guess what is happening now? They're going to launch an ETF. They're looking at an exchange-traded fund that will allow anybody with a brokerage firm to make it as easy as hitting a buy button to go out and buy Bitcoin. So you've got to look at this preponderance of evidence, right? All these people are already wealthy. All these people care about their reputation. If Bitcoin is such a trashy asset, why are all these people getting involved?
This is it's really interesting because this is kind of like, in a much more positive way on this side than what these people are doing. It's kind of like with Donald Trump. You don't listen to what he says because he'll say some stuff that's like, what? Watch what he does.
Right.
Because what he's doing is making sense. If you're a conservative, it's making sense.
Right.
And it's moving orderly. But what he says sometimes is almost misdirection.
Yes.
That's what they're doing.
Misdirection.
Okay. Let's talk about Nextel and Apple.
Okay, yeah. So I want to talk about what has separated me in this marketplace. I think what has allowed me to show my readers such massive gains, and the reason why I don't just sell right away is because some of the experiences that I went through in the past. So between 1990 and 1991, I was a kid, and I had loaded up on tech stocks. I had a lot of Microsoft, a lot of Oracle, stuff like that, and I had a bunch of it personally. And then the whole market crashed, and my Oracle went down 85%. Right on a split-adjusted basis, it went down to 12.5 cents a share, and I got scared out of a lot of it. And I sold a bunch of my Oracle, and I sold a bunch of my Microsoft, and because it was a crash, just like we're in right now.
Right.
I went back and I looked at the math, and by the end of the decade,
don't do that.
if I had held those positions, I would have been $20 million richer just on 2 stocks. On 2 stocks, right? That was the magnitude of that move. And you would think I would have learned my lesson. In 2003, we had another crash. I sold my Nextel, which was a great company.
Yeah.
Sold it at $2. Less than a year later, it gets bought out at 14. 2003, I'm super early on Apple Computer. I'm in at like a split-adjusted basis of around $1.
Oh my God.
And owned it for a couple of years. I thought I was making a killing on this idea, sell it, and if I had held on to it, my clients, because of the amount that we owned, collectively, my clients would have made $49 million.
Oh my gosh.
Right. So these lessons are very real, Glenn.
Right.
And so I have been through this cycle over 3 separate decades, and I've got a do-over now, right? 23 years later from 1990, I've got a do-over. And so my mission here is not only just to grow my wealth, but to help America grow their wealth too. I mean, the average American investor got blown up in 03, got blown up in 08, and their savings have just been absolutely demolished.
This is a chance for people
to rebuild.
To rebuild and rebuild in a dramatic, possibly generational sort of way.
Without risking
a lot of money.
A lot of money.
Okay. So I'll just encapsulate this. What you're saying is they've played their card.
Right.
They've driven the market down.
Yes.
These kinds of early techs, we'll show you here in a minute, it's very volatile. But then at the bottom, they say, don't go in, it's going to crash, it's going to be worse. They all start buying.
Yeah.
You're saying now is the time to get in.
Now is the time to buy.
Because they're coming.
Yes.
And
now,
once they come,
you will see this market absolutely explode to the upside.
So now let's go back to the 5 corrections. This is 1 year.
That's just last year. Yes. That's
Explain this.
So I had recommended Bitcoin back here, and in 2017 we just saw this massive volatility. And you got to remember, if you don't see that, you see this big move down, and you're freaking out. So every time this happens, most people.
I mean, a 40% crash is scary.
That's what happened in July.
Right.
But I would say what separates me is that when we see these big these moves down, I get in front of a camera and I shoot a video, and I explain to my readers.
You don't hide.
What's going on. I don't hide under the counter, right? I let people know what's going on.
And here's the really important part here. If you buy at the low,
right,
at the next crash, you're still higher.
Yes.
You buy here at the low, the next crash is here.
Yes.
You buy here. So if you're buying at the crash, even if you buy at the high, you're still higher than the last crash.
Right. So this is one of the reasons why I say that Bitcoin is not a bubble, because if you look since 2011, we've had 4 major moves from lows to high, from lows to high. And even if you bought at the high of each move, you have still made money.
Right.
And that can't happen in a bubble.
No.
That can't happen in a fraudulent asset class.
Okay, so the stock market is different. It crashed like this, 39% or 30%. But that was 10 years ago. We don't have those wild swings.
Right.
But early tech does. Can we go back to Amazon and show the difference here early on with the crashes?
Right. So here, this could be a cryptocurrency chart, right? I mean, this is from 94 to 54. Oh my good Lord, right? I mean, that makes you want to throw up when you see that.
Right.
Right. You know, from 246 to 173, 402 to 297. This is just horrible volatility.
And no one. If I owned it at 402, knowing me, and it goes to 297, and I don't see it going back up, I just see this, I begin to panic.
Of course.
And I think we should sell some of it.
Right.
No one in their right mind today would say sell Amazon.
Right, correct.
Right?
Yes.
They would say, oh my gosh, you've got Amazon stock, when'd you get in?
And so this is the special sauce of what we do, right? How emotionally, the average person can't handle that. And so I recognize that, which is why I recommend small positions.
Okay.
Because if you're not risking life-changing money, then you have the ability to handle that kind of volatility.
Which is when I, when it was at $300, I didn't take my own advice, but I said to my audience, look, buy it, but a fancy dinner and a weekend,
right?
Okay, you're going to blow that money.
Yeah.
Just take that amount and put it into the market.
Yeah.
Most people think you can't do that now.
That's right. I had somebody ask me that question in Vancouver when I gave a speech. They said, oh, you can't get rich on $200 or $400. And I beg to differ. You absolutely can.
So just really quick, if you put $200 into Apple, today it'd be worth $59,000. $200 in Amazon it would be $111,000. Microsoft, $200 would be worth $164,000. That's an 82,000% increase, and none of them had a straight line up.
No.
Okay, but none of these things really had the ability at this point. We're still really young because of the space.
The space is incredibly young. So the whole cryptocurrency market is under $300 billion, right? So companies like Apple, that's about how much cash they have on their balance sheet, maybe a little bit less. So you only get the opportunity to make this kind of money from a small amount of money for a very limited period of time. The last time I saw a market that was small enough that you could do that in was the tech market from the early 90s, right? Because we didn't have a lot of hedge funds back then. We didn't have these massive pools of capital like we have now, and companies went public a lot earlier in their cycle, in their capital raise cycle. So you could get involved in a Microsoft when it only had a $400 million market cap. If a company like Microsoft comes to market today, it's already a multi-billion-dollar market cap.
Yeah, and you're not going to see those.
You won't see those same
big gains. Okay. Let's go ahead we're going to take some questions here in a second, but let's go to I think your
prediction?
Big predictions,
okay.
and your philosophy.
Okay.
Let's start with your philosophy of that it's important to
my position sizing.
Yes.
Yeah. Okay. So what I say is, there's a couple of rules that I have for your position sizing. If you're a smaller player, $200 to $400 per idea. If you're a bigger player, you can put $500 to $1,000 per idea, and that you keep it uniform. It's really important that you keep it uniform, so you're not over-owning a loser or under-owning a winner. Now, another rule that you can use is commit no more than 5 to 10% of your liquid net worth. Let me repeat that. Liquid net worth. Don't put 5 to 10% of your whole net worth.
Yes.
Your liquid net worth. And again, don't say, okay, well, this idea looks really great. I'm going to just buy more of this one. The key is to use the same position size across your entire portfolio. And I just want to say, if you look at the way that Bitcoin has moved over the last few years, since 2011, if you had bought Bitcoin when it was down 71%, right, which was as far as Bitcoin was down during this latest run, if you did that in 2011, 2013, 2014, the last time Bitcoin was down this much, if you bought it when it was down 70%, you would have made 55 times your money. The time before that, you would have made 289 times your money. The time before that, you would have made 2,083 times your money. Now, there's no guarantee that's going to happen again, Glenn.
Right.
But the odds are in your favor when you buy in after such a steep sell-off as we've seen now.
What is custody?
Custody has to do with a big problem that institutions are facing about getting involved in crypto. In crypto, any company that is managing money for other people has to have the stocks that they buy held by somebody else, a custodian, so they don't run off with your money. right? So you have companies like State Street, which is the second largest custodian in the world. They hold over $2 trillion of other people's assets, and they're trusted to hold those assets. So we don't have a proper custody solution in the Bitcoin and cryptocurrency space yet. We had one that was just announced by Coinbase, but what we think is going to happen is that you will see some larger companies start offering custody. And when you have custody, then an insurance company or a money manager or a pension fund can actually start buying Bitcoin.
And how far away are we from that?
Oh, we're very close. Nomura Securities just announced, and they're a $100 billion operation out of Japan, just announced that they are launching a consortium, a custodian that'll be in place by the end of this year.
So that means the California Teachers Fund
could potentially
put and just you put 1% of one of those things in.
Could buy Bitcoin.
And there's, with the pension funds and the condition that they're in, it would be insane not to put 1%.
Right. So now I have to be very careful about saying this and not burning a source. So I was at a private event held at a castle in Tuscany about a week ago, and there were 65 people that were invited, and I was fortunate enough to be one of them. And I had a meeting there with a gentleman who used to run a $20 billion state pension fund. And he loves crypto. And I was talking to him. He left that fund, the state pension fund, and I was talking to him. And I said, how are state pension funds going to come into crypto? Because if you buy crypto and it goes down, you're going to lose your job, right? How do you do that? And he said, Tika, this is the reason why I left my job, to start up a whole new money management company. And so what they're going to do is use a vehicle called a fund of funds, and I'll explain what that is. So you set up a fund, institutions invest in that fund, and then that fund invests in other funds that invest in crypto. And that way, the institution has no direct exposure to the cryptocurrency. They're not holding the cryptocurrency. They don't have to worry if they're violating state rules. All they have is ownership of a fund which owns shares in other funds.
Give me an idea of the scope. Let's say BlackRock. If BlackRock, just themselves, them, they invest 5%.
That's bigger than the entire market cap right now of the entire space. I mean, they have $6 trillion, right? So it's over $300 billion.
If these people just took 0.5% and invested,
we're going to have a multi-trillion-dollar market cap.
Okay. So then let's go to last chance.
Yeah.
Don't make this prediction, because I'm going to hold you responsible. And
as you should.
In January 1, you say Bitcoin, which is at how much today?
About 7,500.
7,500 will be
$40,000. We will see $40,000 Bitcoin by the end of the year. Do you want me to explain why?
Yeah, I was going to say, because of this.
That's part of this, yes.
And?
There's a bigger reason. Since 2014, people have been trying to get an exchange-traded fund, an ETF, approved by the SEC, right? So an ETF is basically like a mutual fund. It goes out, it buys stocks. It's a way to own a basket of stocks just with one stock. So people have been trying to do that for Bitcoin, because buying Bitcoin it's kind of a pain in the neck.
It's a hassle.
It's a hassle.
Buying Bitcoin, because of Mark Andreessen, is not as hard. Right. Some of the other ones, you just like, I don't know how to buy this.
Right, they're difficult to buy.
Right.
So what an ETF would do is it would make it as easy to buy and hold Bitcoin as going into your Fidelity account, hitting the buy button, and buying any normal stock. Right? So that would automatically open Bitcoin up to trillions of dollars of new investment. Now, since 2014, when people have been trying to do these ETFs, I've said it's never going to happen. Right? There's no way the SEC is going to approve it. You have the Winklevoss twins, the guy that made a lot of money in Facebook, had their Facebook idea ripped off. They've been trying to do it since 2014. I said there's no way the SEC is going to trust. In their eyes, I don't call them kids, but in their eyes, a couple of kids with a Bitcoin ETF. There's just no way. And so it didn't get approved.
Wait, why?
Because they don't understand it. Two, they don't trust the Winklevoss guys. They don't know them. They're not Wall Street guys. And they don't think that they have the ability to protect the assets and protect the end users. Right.
So they want to make sure that this doesn't become a giant disaster.
Because they lose their jobs. Right. Everybody at the SEC will lose their job.
Yeah, well, that's not the point.
Right.
Everybody in the country would lose their money. I wish they would.
Yeah. But they're not thinking that way.
They're not thinking that way.
They're thinking about their jobs.
Okay.
So then you had two more established players, Van Eck and SolidX, come and try and do an ETF. And I said, okay, this is more interesting. Maybe they have a shot. And then just recently, and this is why it's got me so excited about Bitcoin, and why I have no problem with this $40,000 price target, is that the CBOE, the Chicago Board of Options Exchange, one of the most trusted, most important financial institutions in the United States. It's up there with SWIFT, it's up there with the NYSE, it's up there with the NASDAQ. Right? They do more derivatives trading there than anywhere else. They're the largest options trading clearinghouse in the world. They came in and they said, we will provide insurance for this ETF. And that is huge. So if it gets hacked, if there's fraud, if somebody loses the key, anything happens that could potentially impact the value of the cryptocurrency held, or the security of the cryptocurrency held there, they have insurance to cover it.
So now it's the big boys at the table. It's the adults.
It's the adults. They're not going to let the kids.
Yeah, I don't mean it that way.
Yeah, but this is the way they view it.
That's the way they're thinking.
Listen, I have the highest respect for the Winklevoss twins. But this is the way that they view it. The CBOE and the SEC, they speak the same language. Yes. They're all the same people, right? They all know each other. They all go to the same places.
Right.
So the fact now that the CBO has put their stamp of approval on this, and I've never said this, unequivocally means that this ETF is going to get approved. Unequivocally. The earliest it could happen is August 16th. The latest it can happen is Q1 2019. Okay, so within this time frame, and I think we're going to get closer. I don't think it's going to happen August 16th. I think it'll happen closer to the end of this year. But I think as people start realizing that this is actually going to happen, they're going to reprice Bitcoin.
Will that change the stability of it, or will it still be very volatile?
Bitcoin will still be wildly volatile.
Okay, all right.
It's going to continue to be volatile until it's a multi-trillion-dollar asset.
Okay. Give everybody something for free here. 3 predictions, or 3, I hate to use predictions, 3 things that you have analyzed that you say, these 3 cryptocurrencies you should invest in.
Okay. All right. Well, I can't give personalized investment advice. What I can do is tell you 3 ideas that I absolutely love. I can tell you a little bit about them, and I can tell you what I believe they will do in price. How about that?
Yeah.
That sound good?
Good enough.
Okay. All right. Well, the first is no surprise, is Bitcoin. I think Bitcoin will 5x from here. I think it'll go to at least $40,000, potentially $65,000 once we actually get the ETF launched. But there's more going on with Bitcoin than the ETF that I haven't told you about that I want to get into right now very quickly.
Sure.
So the narrative behind Bitcoin is what? It's slow.
Yep.
And it's expensive.
Yes.
Right? It's like the Stone Age of blockchain.
Yes.
So there are 2 things happening that are going to change that. One is called the Lightning Network, which is a protocol that will allow thousands of transactions per second to take place.
So if I go to a store, I go someplace, I now have to wait 10 minutes.
10 minutes, right.
But I won't have to wait the 10 minutes?
Not with the Lightning Network, no. And more importantly, it's taken the cost down to do a transaction from several dollars to a millionth of a penny. So free, essentially free. It's essentially free. Now, what happens is, and I saw this in the 90s, is that people look at a technology and they say, like the internet, and they say, well, you can't even download a picture. It takes 10 minutes to download a picture. How are you going to stream movies on that? You guys are crazy. You've got your head in the clouds. And technology is an iterative process. It continues to improve. And so what's happened with Bitcoin is that people have this old view of what it was rather than focusing on what it's going to be.
Can I give an example of this?
Yes.
When I left Fox, they laughed at me. They said, come on, you're not doing that internet thing. And I said, yeah, I am. They're like, that's crazy. Nobody watches TV on the internet. This is before, Netflix and HBO and me. We were the only ones that were doing this. And it was crazy. And when we first started talking to people, we said, I know there's a problem with buffering, et cetera, but soon everybody's going to be watching TV on that.
Right.
When's the last time you watched, NBC,
Broadcast
CBS?
TV? Nobody watches it anymore.
Yeah. It's over. Okay, It's still out there, but it's now over. That's been 8 years. This right now is the same thing. People don't see over the horizon because we're so used. It's so big. Who's going to destroy the networks?
Right.
Well,
the
internet.
Right.
It happened. So it's the same kind of thing.
It is the same kind of thing. It's difficult for people to visualize a world different from the one that they are currently in. It's the same thing with smartphones. People couldn't understand how smartphones could be as transformative as they were. So the last piece on Bitcoin I want to talk about is something called RSK. And this is really important that no one is talking about. And this is kind of like the inside scoop here. RSK will allow developers to create what are called smart contracts. So a smart contract is a piece of code that can execute and actually do something, right? So it says, if Glenn does this, then Glenn will receive that, right? So it's an actual programming language that you can use and build real applications on. When you match that with the Lightning Network, so your transactions are virtually free and they're incredibly fast, what do you have? You have a whole new internet that you can build on, right? You have a whole new development platform that you can build on and have the entire security of the Bitcoin blockchain behind you.
So that's coming from Bitcoin.
This is coming from RSK, which is a development team called Rootstock. So that they're developing that now, and by the end of this year, RSK and Lightning Network are going to start to propagate across the network. Yeah. So here's to think about it. It's the functional equivalent of going from a dial-up modem to broadband in a year.
Wow.
Right? Think about what that did to the internet, how it completely changed the internet, how much value was created when you were able to do that. And so that's what's happening with the Bitcoin network.
Okay, so that's number one.
Number one.
Number two.
Okay, so number two, a lot of people are going to wonder why I'm recommending number two. And number two, the reason why I'm recommending number two is because once the first ETF launches, after that, you are going to see index ETFs. So like, the S&P 500 is an index ETF. So what I think will happen is you will see ETFs launch that will give you a basket of coins.
Right, okay.
Right? So that's going to be another huge, you talked about how much of a pain in the neck it is to buy other coins.
Yeah.
It's a nightmare.
Yeah, it is.
Right? So, we walk you through it. We have videos how to do it, but it's difficult.
And they're all different, and it's crazy.
So what I think you're going to see is crypto index ETFs. Now, Bloomberg, with Mike Novogratz, who's this billionaire investor, has already launched their own crypto index. And so what I think you'll see is an ETF that will mimic that index. And so one of the coins there that I like a lot that's very cheap, that I think will 4x from here, and that's just returning back to the old high, is a coin called Litecoin, Litecoin. So Litecoin's trading around 87, and I think it's going to easily go back to its old highs, which is 320, which is 4x from here. And generally, it's kind of like an old technical analysis rule. If something can break out its old high, it'll usually double again from there. But I'll be conservative and say a 4x from this level. So Litecoin is a coin that I think will get picked up by numerous crypto index funds, and I like it a lot.
I'm in love with that because I already have some.
Okay, terrific.
And I've been looking at it going, what have I done?
So my third idea, I think, is going, in my opinion, I believe it will 10x from here. I think over the next year and change, it'll 10x. Right now, it's trading at 260, so I think it's going to about $2,600. And the name of the coin is Dash, right? So DASH. Mm-hmm. I love Dash. So Dash is intended to work like physical cash, and Dash has fixed a lot of problems that have plagued other networks. So, for instance, if you talked about this, if you go into a store and try to use your Bitcoin to buy something, you got to wait 10 minutes. With Dash, they have something called instant send. So you can immediately buy something, and it gets approved by the network right away. And nobody else has that. So having that instantaneous ability to buy something makes Dash incredibly useful. And also, Dash has something very important for some people, and it has privacy built in. So if you want your purchase to be private, you can use something called private send. You pay like 15 cents to use it. And if you use private send, then it's hidden on the blockchain.
So that's what the Russians should have used.
They probably should have used the private version. Yeah. I mean,
okay.
they're
costs you 15 cents.
Yeah, 15
Russia.
cents. Yeah. Another thing that I like about Dash is that there's a huge problem in the United States with unbanked legal marijuana growers. Right, so there's $55 billion a year in cash.
Right, because they can't
put it in the bank.
They can't put it in the bank.
Right,
yes.
So Dash is attacking that market, and you have growers that are using Dash in their point of sale equipment, and so people can convert their cash into Dash, use Dash, and because Dash saves them so much money, they can offer them discounts on their purchases and still come out ahead.
So with your strategy,
yes.
Would you buy $100 or $200 of each of these?
Again, I would say if you're a smaller player,
yeah,
$200 to $400 per idea. If you're a wealthier investor, $500 to $1,000. And the sanity check you need to do is what is 5 to 10% of your liquid net worth? Write that number down, right? And that should be your entire allocation to cryptocurrency. So maybe it might be a bigger number than most people. So that's fair enough. You can use a larger number.
Can I just ask a question?
Yeah.
Let's say this thing starts. If I start to see Bitcoin going to 20,000, 21,000.
Yeah.
My instinct would be, oh my gosh, he's right. I'm going to put a whole buttload of money into that. That's
the wrong idea. I wouldn't do that. Yeah.
Okay.
I wouldn't do it. But this game, Glenn, is about staying power. We are on the verge of a massive explosion of value in this whole market. But if you get blown out because you were done with your money and you put 30, 40 grand into an idea that just collapsed, you're going to miss it all. And the regret that I experienced in the 90s and in the double O's, no one should have that kind of regret. $20 million? $20 million, right? $49 million that should have been my clients and wasn't, right? So I put together this strategy and this methodology so you can survive this volatility.
I hope